Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 3rd January 2024. RBI has decided to extend the timeline for implementation of the instructions on fair lending practice penal charges in loan accounts by 3 months. Accordingly, registered entities shall ensure that the instructions are implemented in respect of all the fresh loans availed from April 1, 2024 onwards. In the case of existing loans, the switch over to new penal charges regime shall be ensured on the next review or renewal date falling on or after April 1, 2024, but not later than June 30, 2024. The GSTN has issued an update to inform that opportunity to declare opening balance for input tax credit reversal in the statement has been extended till 31st January 2024. Notably, in order to facilitate the taxpayers in correct and accurate reporting of input tax credit reversal and reclaim thereof, and to avoid clerical mistakes, a new ledger, namely electronic credit and reclaim statement, was introduced on the GST portal. It is also provided that facility to amend declared opening balance for input tax credit reversal will be available till 29th February 2024. Kindly note that after declaring the opening balance for input tax credit reversal, only 3 amendment opportunities post the declaration will be provided to correct declared opening balance in case of any mistakes or inaccuracies in reporting. RBI has issued Master Direction RBI Internal Ombudsman for Regulated Entities Directions 2023 to harmonize instructions applicable to various regulated entities on the Internal Ombudsman or IO mechanism. Directions bring in uniformity in matters like timeline for escalation of complaints to the IO, exclusions from escalating complaints to the IO, minimum qualifications for appointing the IO, etc. Instructions are expected to further strengthen IO mechanism. A day after the Burman family, the largest shareholder of Religer Enterprises Limited, announced an open offer to buy more shares to take control of the financial services conglomerate, Rashmi Saluja, executive chairperson of the company, acquired around 8% stake in its wholly owned shadow bank, Religer Finvest Limited, through an employee stock option plan award. The award in the unlisted subsidiary ascribed its value in a band of Rs 150 to 260 crore. Previously, proxy advisory firm InGovern had estimated the ESOPs awarded to Saluja in Religer Enterprises as well as its health insurance subsidiary Care Health Insurance to be worth Rs 480 crore. Together with the thus far undeclared award of stock options in Religer Finvest, the total compensation earned by Saluja via ESOPs could be between Rs 630 and Rs 740 crore. This is in addition to the annual salary and places Saluja amongst the highest paid executives in Indian corporate history. India's top technology companies, which together have the second highest weighting on the Nifty just behind the financials and banks, will likely report their slowest quarterly revenue expansion in a decade in the 3 months to December, although inherent client concentration and domain strength differences indicate a K-shaped growth path for the aggregate industry. The third quarter results season will begin with TCS and Infosys announcing the results on January 11th, followed by HCL Tech and Wipro on January 12th. The focus this quarter will be the commentary on the demand environment and 2024 budgets. Fintech startups Grow, Angel One and PhonePe are emerging as top distributors of mutual fund products, adding lakhs of new systematic investment plans every month. They drew in nearly half the new SIPs opened in November 2023, according to data from asset management companies. COVID depressed the passenger vehicle market across the world. India emerged as the fastest growing market for a key reason. Semiconductor chips, important components for cars, went scarce due to the pandemic disrupting supply chains. and when the pandemic effect started waning, there was a big scramble for those chips. India was able to produce cars faster than other major markets because its cars have fewer chips.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.